Welcome to FinAnatomy. Today we're diving into how the actions of a single government agency could be splitting the entire stock market in two, and what that might mean for your investments. So this is the big question we're tackling. The moves one agency is making are creating these two powerful, opposing currents in the market. It's a dynamic that's basically rewriting the rules for investors.
You see, the market isn't just going up or down anymore. It's splitting into two very different paths. We're watching a K-shaped reality unfold, creating clear winners and clear losers, all driven by a massive policy change. All right, let's get right into it. The spark that ignited this huge divergence comes from a game-changing new law, one signed on July 4th, 2025. That number you're looking at, $170 billion, that's the amount allocated to immigration enforcement through the One Big Beautiful Bill Act, or OBBBA. This unprecedented budget instantly turned ICE into a massive hub of federal spending. To put it simply, this surge in funding is the engine driving the entire K-shaped split that we're about to break down. Okay, so let's move to the upper arm of that K and see exactly how this funding is directly benefiting a very specific group of companies. Private prison companies like Geo Group and CoreCivic are the primary contractors for ICE. And thanks to this new funding, well, they're forecasting some absolutely record-breaking revenues. And hearing it straight from the companies themselves really tells the story. This isn't just optimism, they're gearing up for unprecedented growth, fueled entirely by government contracts. But here's where things get tricky. The market's initial excitement, well, it got way ahead of reality. The stock price actually dropped in 2025 because the operational ramp-up was just a lot slower than investors had hoped for. And this side really shows you that gap between market expectation and reality. ICE was aiming for 100,000 detention beds, but by the end of the year, the actual number was closer to 68,000. That right there explains the initial disappointment from investors. But this windfall extends way beyond just the detention centers. We're talking about a whole ecosystem here, from surveillance tech to transportation for removals, and even aircraft manufacturers like Boeing supplying planes for deportation flights. All right, now let's look at the lower arm of the K, where this intensified enforcement is creating a severe supply-side shock to the economy. According to the Brookings Institution, this policy led to something we haven't seen in at least half a century. Net migration likely turned negative in 2025. The numbers range from negative 10,000 to the staggering figure you see on screen, negative $295,000. Now, this is the most important part to understand. This isn't just a temporary dip from a normal economic cycle. No, this is a structural contraction created directly by policy that reduces the total number of available workers across the entire economy. And the impact is felt most sharply in agriculture. A case study in Oxnard, California, estimated a shocking 20 to 40% reduction in the workforce directly because of ICE raids. And the bill for that sudden labor shortage? It was steep, up to $7 billion in crop losses. Because there was no one to pick them, perishable goods like strawberries literally rotted in the fields. This shows you the massive direct economic cost of the policy. And this pain is being felt across all of these labor-intensive sectors that rely heavily on immigrant workers to operate. Now, the effects of this labor shock don't just stay in those sectors. They ripple out across the entire economy, affecting consumers and overall growth. So, the labor shortages in that lower arm of the K translate directly into higher prices for everyone. You feel it at the grocery store, in the housing market, and when you go out to eat. This is acting like a structural brake on the entire economy. Analysis projects a reduction in GDP growth by 0.3 percentage points in 2026 alone. Fewer immigrants also means fewer consumers. We're talking about a drop in consumer spending of up to $60 billion in 2025, with another potential $40 billion drop expected in 2026. Now, one of the most critical macroeconomic indicators is also flashing red. It's something called break-even employment growth. This break-even number, the jobs needed just to keep unemployment stable, has fallen dramatically from around 150,000 jobs a month to a level that could actually turn negative in 2026. That points to a fundamental change in the labor market. So as an investor, as an observer of the economy, what should you take away from this profound shift? The entire narrative has fundamentally changed.
Immigration policy is no longer just a social or political issue, it has become a core driver of fiscal policy and therefore of market outcomes. What we are witnessing is a massive, policy-driven redistribution of capital. It's shifting away from broad, labor-intensive industries and flowing into the much narrower security industrial complex. And these, right here, are the defining questions that are going to shape market dynamics for the foreseeable future. To make sure you don't miss deep dive analyses like this one, be sure to subscribe to our Fin Anatomy channel and turn on notifications. And please remember, everything presented in this analysis is a framework for thinking about market dynamics. It is not investment advice. You should always make your own investment decisions freely. Thanks for watching.